The Case-Shiller home price index showed more deterioration in February, not as fast a rate. Interestingly enough, who do we have to explain to us what it all means? Robert Shiller, Yale professor and co-founder of the Case-Shiller Index. Morning, Professor Shiller. How are you?
I'm fine.
I'm here with Nick Timmeros, joined by Nick Timmeros, and we were just talking about this briefly. Nick thinks this is a good report. I'm not really convinced. I look at the year-to-year numbers and I see it's still down. What did you make of these numbers this morning?
Well, the most optimistic thing is that on a seasonally adjusted basis, the 1 month numbers are up just a tiny bit. So it's positive in that sense. This is the slow season still.
Mm-hmm. But if you look at the rate of declines, Dr. Shiller, isn't it the case here that we're seeing those rates of declines are slowing? Or am I just too buried in all the negativity and I'm kind of groping around here for any sort of positive that I can find?
Well, we've seen generally declining prices for 5 years now. We peaked in 2006. It's more than 5 years. But there was an upswing in 2009 with the first-time home buyer tax credit, and now it's kind of sagging down. I don't know that I see, if you just extrapolate the trend, it looks pretty steady down still. I'm not saying one should extrapolate the trend, but there's a temptation to do that.
Yeah, it's interesting because you looked at the report and it says now that home prices are back to around their 2002, 2003 levels, which is really about when the housing bubble started to get, really started going. So if we're back to that, if we've sort of burned off the entire housing bubble, I'm wondering, why are prices still falling?
Well, because past bubbles in history have often overshot. Yeah, I think if you do a real inflation-adjusted version of the home prices, we're kind of at the level we've been at typically over the last century. It hasn't really shown a real uptrend. So we're kind of normal, right? These are normal home prices. The only question is, remember, psychology matters. So if we get, and we're not climbing out of this recession at all fast. We're out of the recession, but we're still in a slow period. So I don't know that home prices will go up anytime soon.
One of the interesting things in the report today, you see a pretty big disparity between some of the markets. Phoenix up 3.3% from a year ago, Atlanta down 17.3% from a year ago. What's going on here? Why is a market like Phoenix, which was so badly overbuilt, beginning to show several months of increases, but Atlanta, also horribly overbuilt, just getting walloped?
Well, the difference between Phoenix and Atlanta is that Phoenix was one of the huge bubble cities, and it dropped in real terms something like 60%. So it was a huge correction, and maybe it overshot a bit. And but Atlanta never had such a big bubble and not such a big collapse. I don't. These things are not entirely explicable.
Well, that's fair enough. So what would you need to see then to say, all right, we've neared, if not hit a bottom? What sort of evidence are you looking for to be able to make that sort of declaration?
Well, we're seeing, some evidence that leans that way. The permit numbers are up. The National Association of Home Builders numbers have been up, although in the latest month they're down a little bit. Consumer confidence indexes have been up, but it's not clear that it's holding. I'd like to see more of that kind of news on a consistent basis. But on top of that, we don't have the basic story that would lead to another real boom like we saw earlier this century. We don't have this success mood right now. We're still in a funk, and so it seems unlikely to me that we'll see a really big rebound.
Yeah, more than in a funk, it seems to me that during the bubble, one of the big issues to me was that you saw home prices going up at really an exponential rate, and you didn't see wage growth. Now I'm wondering, do you think we're going to get back to a point where housing prices are more tightly, are tied more tightly to wage growth, which isn't really great either? Do you think we're going to get back to a period like that?
Well, I think there are big trends beyond that we have to think about. One of them is that people they seem to be becoming less entranced by the traditional American dream of a home in the suburb that you drive, a half hour to get to. Gas prices are high. The outlook is ambiguous. So I think people are thinking more of renting or staying in a center city area. there's a change going on that may last for many years. I think these outweigh anything else. If these changes are really happening, they mean that we're not going to see encouraging movements in the housing market in the foreseeable future.
One other factor right now is affordability is, of course, terrific because home prices have fallen so far, but you also have mortgage rates at 4%. New home sales today, the report was that we were up 7% from a year ago. Existing home sales have been up about as much from a year ago. Are you surprised that we aren't seeing more activity given how cheap that monthly payment is for a home buyer right now?
Yeah, I know. It's really cheap. I think it might be a reasonable thing. It certainly is a reasonable thing if you want a home to buy now because you can lock in a low rate. But now people aren't thinking that way. And I think the anxiety outweighs the interest rate. You know, when you're thinking of buying a house, your first thought is my job secure? And do I really need this house?
Right.
Second, you look at the interest rate.
Right. Professor Shiller, I want to thank you for your time. I really appreciate it.